Welcome to TradeTheNBI.com. This is John. This report is for the 27th. Well, here's the daily. I believe this is the PNT2A. Yes, it is. Clearly from that crossover of Magenta coming back up, and again, from our viewpoint, it was always the same thing. From 41.35 to do fast there, from an ABM standpoint, rising, anything above it, maintaining along below. And we know this is strong as long as you have that white under the 10, but now it's starting to pop up above. We'll see if we get a corresponding breakdown from yellow and red, because if red moves below the blue here, you're going to have weakness signal, and then of course magenta dropping below. Yellow would be the same. You would have to have a pretty precipitous decline to probably generate some of that reading, but what we may end up getting is some softness as it just gets more fatigue, because here you're going to see higher highs. Right now we're at a lower shakeout. There's potential that that can still rise, but and also noticing these little yellow lines that are starting to pop up. We've already had a positive extreme from right here for 4,021, so we know where we're headed to when the selling starts. And of course, some people will say, there can never be any selling. Well, yeah, I've been through both bull and bear situations before. Believe me, in both, there's counter moves in all of them. And even in this massive upswing from, well, all the way back to like 2016 in the election, and even before that, 2009, and then even within the Great Decline, you had plenty of huge up moves in between them. And so likewise, even within a huge upturn, you're going to get significant down days. So it's just a matter of understanding that and trading accordingly. From an NQ standpoint, likewise looking very similar. Not bad at all. With the weight above the 10 level here, you're already potentially a bit more at risk, because it won't take as much for that red dip with the yellow coming up to really create a downturn. You can see that difference in the shakeout. You get matching highs, lower shakeout. Now, as long as it's rising, it's fine, but it's when it stops rising, that's when you got to pay attention. Gold is just in a flat line. It's been in a sell configuration here for a little while. We've been holding it up. It's the fact that we've had the white below 10, and that really hasn't accelerated. You can also see the red below blue. This is what a sell signal would look like from a daily standpoint, or even in the mid-higher frames. There's that euro and that tear right back up to where it was before, when they decided the EU was not going to print nearly as much money. That was 5K of the NQ. Interesting thing about this, you know, within the NBI readings coming through here, we talk about a larger bull versus trend versus little runs. And so in creating some of the program, it's like I can be in what this would be described as a bear run here until you get to this pivot that takes place on the green, and I'll show it on the 5K how we worked it out. But basically, any pivot here of the green that's above 25 level, which is this white line, would indicate the start of a run. Whether the yellow moves below the green would make it a bear trend, and if it's above, it would be a bull trend. Now, within that, you can be outside of that green, and if magenta's above and you're right above the 33, you're in a bull run. Otherwise, you're in a relative bull run within the bear trend. And likewise, when we created the secondary flip and we were not below, you're now in a bull trend. And within that, you can have bear runs, like these crossover with the magenta right here, where red was dipping down. Of course, it's short-lived here. You got to have the white moving up, and that's exactly where this triggered. Now, some will object to some of these. Well, right now, while we're in this massive bull rally, some of these sell signals that look like interruptions that just turn around really quick seem like a pain, but you should be grateful for them, because when we do get into a more pronounced selling, you may find that one of these or two of these will take you to a 50%, and then the next bar all the way to the 100 to the 0, because it will be much faster. And so the triggers are still the same. They represent weakness. It's identifying the weakness correctly. I think it can do it just a little earlier, is my whole point, because when I have that breakdown right here, literally is where I would consider the weakness beginning. Yes, it's a drawback not having the white above the 10 level, so you know that it's going to be short-lived, but catching it earlier does let you capture that, so that if you do get this turnaround move, you're not entering right at or near the bottom. So this is only an adjustment that I'm working with on that. So, whoa, yes, exactly. 5K chart, a lot happening here. So what I tried to do is I tried to identify for you on the screen what that trending model looks like, and I did it with these little dots up above. It's like best way to do before altering a program. So clearly what it's identifying is the rollover here. In this particular case, the green does dip down, putting it into a bear trend, and that's accurate. But what happens is you end up with it moving outside of the green, creating a bull run, and then it marks the pivot as a turnaround. And then when everything starts moving back up, obviously we had our buy signals. This would have captured at least a bar earlier on the move, but we like the confirmation of getting that white above the 18 level before jumping up. But within bull runs that have short moves, I think that I'll alter the code so that as soon as we have the crossover, even before the full kind of buy setup is developed, that way we'll capture within short runs. An easy way to do that will be because it's within the post trade of a long setup. So, but what I was pointing out was that the run coming all the way through to the pivot, and then boom, you begin the next chapter, in which case this blue one is a bull run because you did not get a dip of yellow at all below it. So when this bull run goes all the way through, you end up with some weakness, but you didn't have it where you had the white coming through. And then it began another run, in which case this one created a bear run, and identified it literally right at the peak there. Now, of course, we could look down at the DOC, and we can see that the DOC rejected the green right there, still crossed right below with the orange popping up. All those things right there, justifications for short. Secondarily, they meet back again. That would be a little more suspect, but then the separation right here, clean. Steel right down the middle of between the two. Your ideal configuration is just having the orange caught in between, and then you know you're going to get a longer run to the downside. And it correctly identifies the down, and then it turns it around. It's a little premature. It's just recognizing the dip of yellow below. What you really have to have is the pivot coming back up, which begins a whole new trend run. And in that particular case, that would be a bear trend within bulk configurations of magenta still being over pretty much the entire time until right about here. We ended up with that brief dip. And again, this is kind of what I was pointing out. You can have these that will literally just burn right through everything. And it's worth noting too that when you see dark red on the chart, that's stop feature that's built into the buy signals, as opposed to like the magenta or violet colored bars that you'll see at the top. Those are really more designated sell signals, specific from a reading standpoint, though these often correspond. Usually you don't get that kind of breakdown without having the same kind of signaling for it. And then a turnaround. Right at the bottom pivot there, you had the magenta move across. So within that bear trend, you get a bullish move. So it captures that earlier. And that's what I identified it. And pretty much it's been in that mode all the way across here. I mean, it's just a flat line. Though in a relatively weak. And this is a good indication. You notice how flat price pretty much is. If you had this same magenta yellow move above 33, you would probably see a bit more dramatic rise in price. So it does make a difference. As always, though, I will keep updating you on the Skype chat, going over it, adjusting this configuration, because it'll be interesting to have. And then when I throw out the Ratio Hawk program, you'll be able to pop these up and you'll be able to see them, whether you want to have them up or not. I may even make them variables. Right now they're adjusted as ATRs off the 100% lines. But overall, a lot of them won't be needed because they're all going to be into the code anyway, and that will take care of it the most simple way. As always, trade well. Talk to you later.